Hello, everyone, and welcome to today's Flipping Fabulous episode. My name is Jacob Jennings, your Flipping Fabulous real estate broker, and I'm here today with Ramez Fakhri with the IRA Club, a very good friend of mine who is just as intelligent as he is good looking. Hello, my friend. How you doing?
Jacob, thank you for the kind words. I don't know if they do me justice, but yes, that's what we're here to do, buddy. Talk a little bit about retirement accounts. I don't know if you jumped into that or I'm jumping into it a little bit too soon, so my apologies if I am, but I'll let you lead it as the host.
Wonderful. You know, I used to introduce you as the guy who brought sexy back and then returned it for store credit.
Jacob.
Now you're getting somewhere. Now it's a little bit more polished here. So I wanted to have you on today to talk a little bit about what a self-directed IRA is and how people can use these vaults where they're storing their wealth and how they can use to invest in real estate. Now, quick little preface before I have you jump in here. In the show, I talk a little bit about how we can actually change our trajectory and take accountability for our financial future by having various tools in place. One of them is understanding how to create retirement accounts that work for you, that you are able to tell, hey, I want you to go there and make money for me, right? Now, the thing about having retirement accounts is that they are products of the federal government. You can't actually touch them. And the heaviest thing you can lift is your cell phone. You cannot actually lift a hammer or a saw or do any of the actual work, but you have to be able to direct it and tell it what to do. So IRAs are so very powerful for this type of thing. And you always give me so much insight. I just wanted you to come through and tell us a little bit about what self-directed IRAs are and how they can help people get investing in real estate.
Jacob, just by the conversation and how you initiated it, listen, it seems like you're just as knowledgeable as I am. So whenever you're ready, feel free to come to the IRA Club. But with that being said, I just want people to understand that the term itself, self-direction, just means control, okay? And I'm going to say this word to you probably, Jacob, over and over again. Control, and not to sound like a broken record, is the name of the game, right? We want to give the control back to you, the investors. So when people ask me who is IRA Club or what is IRA Club, we are a Chicago-based trust company that allows you to utilize a portion of your retirement funds to invest in alternatives. For example, as Jacob mentioned, real estate. You could also utilize it for land, syndications, promissory notes. You could even do crypto, all right? Hard assets like precious metals seems to be a hot commodity as of recent, just because with everything that's going on, Jacob. But I want you to ultimately think of IRA Club like many of you have 401ks, IRAs, 403bs, 457s, TSPs. The majority of those funds are sitting with your current employer. And I always like to refer to these four companies as the four horsemen in our industry because they pretty much control all of it, right? You're talking about Fidelity, Vanguard, Schwab, and TD. And just believe it or not, Jacob, it's a little bit under 70%. So 70% of $33 trillion. That's a massively big amount, and their money's made on percentages. So why is this so valuable and important to you is the majority, or if not 97%, let's be real transparent and upfront, 90% of those funds that you have within retirement funds are allocated within the traditional sense of stocks, bonds, mutual funds, and ETFs, right? The problem with that is, what are we currently going through right now, Jacob? Right? You know this better than most. What are we going through?
We're going through a recession and a market correction.
Well, if that's what they're calling it, a recession, because I don't know what they're calling it these days. But yes, ultimately, we are in the middle of a recession, right? The market right now is unbelievably volatile. Everything today is working against your retirement account. Think about that, right? You're talking about inflation is still high. It isn't going anywhere. It's probably here to stay, I would personally think, for another year or so until they get it back down to that traditional 2%. Mr. Powell has made it very clear he's going to be raising the interest rates at least 1 to 2 more times. Historically, every time that happens, Jacob, what happens to our stocks? They drop, right? They fall. So if you know that, if you know taxes are on the rise, if you know the market's volatile, if you know all of these new rules and regulations are coming into place, how do you protect your retirement account, right? Alternatives. And that's the problem is many of you that have 401ks are traditionally stuck again in the norm of stocks, bonds, mutual funds, and ETFs. Our job is not only to give you that option, because keep in mind, me and Jacob are actually having this conversation, is we allow you to do stocks at the IRA club. We allow you to choose bonds, right? We allow you to choose ETFs, right? But we also give you the alternative side of it, right? Hard, tangible assets. And that's a really big deal. And I hope, Jacob, that was a little bit more of a bigger clarification than I wanted to, but that's always typically how it always starts is who is the IRA club and what is it that you do that's different than Fidelity, Vanguard, or Schwab? And lastly, and I know we're going to jump into this maybe a little bit later, me and you, but fee structures, right? Fee structures are a huge thing. And I know, Jacob, you want to go ahead and jump into that a little bit later, but I'm, like always, going a little bit ahead of the curve.
I love it because my ADHD keeps up with you every time. I'm like, yep, notes, got it. Here we are. I think it's great. So one of the things I want to talk about really quickly, because you just brought up some really good points, and I want people who are watching this to take this home. All right. People, when I got into real estate, it was 2016. I remember being 24 years old, and like the 2008 correction was going on, and the financial markets crashed, and there was mortgage fraud everywhere. There was just all sorts of corruption. Banking institutions were just corrupt as anything, and everything collapsed all around everyone. And after some years, people started to try to get back into real estate, and they were like going, "Oh, we bought all these properties that's so cheap earlier in the times," because they were like, you get a house for $40,000 or $20,000 and you put 10 grand into it, rent it out, make all this money. So there was a lot of wealth creation that happened during that time where people had a lot of fear, right? And there was a lot of confusion. So then this all happened, and then people were hesitant to get into the market when things were starting to become healthier because they were waiting for that next bad news cycle to hit. And so they were studying, they took all these courses or classes, watched all these YouTube videos or Bigger Pocket podcasts, and started to go, okay, when the next correction happens, I'm going to be ready for it. Awesome. Here's the deal though. It's happening. And those same people that were scared to act in 2008 and 2016 are scared to act today. Why? Because they still don't have the tools in place to believe in themselves to go and take advantage of the market conditions. Now, I want to say this very clearly. I'm a big proponent to remind people that real estate, first and foremost, is about people. It's not about the house. It's not about the property. It's not about the land. Yes, that's all a part of the asset class. But when you're investing in real estate, you're actually investing in people, creating solutions that other people have. You've never seen a turtle walk in and sign a lease. Okay, it carries its house on its back. Real estate is for human beings. We're the ones that give a damn about it, right? So you want to make sure you have the right tools to value that asset class. Another asset class that is so incredibly valuable are things like your IRAs, your retirement accounts. Those are asset class that also build wealth. Now, if you were holding your money in a checking account or something that you could actually touch, where you can withdraw it easily and go spend it at the mall, you're going to be taxed on that money right away. Why? Because you are able to disperse it. You're able to use it for whatever you want. But if you have it in a product like a retirement account that is a security or something that is monitored that's regulated, I should say, that is now in a market like the real estate market, the stock market, the commodities market. And these markets create the economy. If you leverage which vault that you are currently able to influence another market, you start to, in essence, vertically integrate by stacking one vault on top of another. And that's what builds wealth. It's strategic. So if you have a retirement account and you want to also invest in real estate, if you stack them on top of each other, you're compounding your investment and getting much more out of it. So, for example, if you would tell me a little bit more, Ramas, about if I wanted to use my IRA, my self-directed IRA, to put into an investment property. How would that look? I'm going to invest into we're going to say a multifamily property. Say we're getting a 5-unit building, something small, right? Okay. And I have $100,000 sitting in my retirement account. How would I be able to use that to my advantage?
So there's really, and most people, that's a great question, by the way, Jacob. And just to piggyback off a little bit of what Jacob said, and the icing on the cake that she should have also inputted was, it grows tax-free or tax-deferred. That's the most important thing, right? That's how the wealthy accelerate their wealth ultimately, right? Typically 25 to 50% faster if they're utilizing a traditional, so tax deferred versus a raw tax free. We could get into that on another later discussion, but the point was, how is this process? How does it work? Where do we start? Where do we end it? So the concept of self-directing here at the IRA Club is open fund invest, right? 3 simple steps. To open up an account, you need 3 things: a government issued ID, that could be your passport, your state ID, your driver's license. These are all valid components. We would actually do a quick background check through Persona. That's where we scan the actual ID itself, make sure there's no federal indictments against you. Otherwise, remember, Jacob mentioned these are federal products. So we cannot grow, or better yet, you cannot grow your investments tax-free or tax-deferred. Lastly, once the account is open, now we need to fund the account, right? And the funding process typically handles in one of 3 ways. You can do a contribution. So up to, if you're up, and again, the rates actually, the contribution limits went up this year because of the Secured Act 2.0 to $6,500. If you're over the age of 50, it's $7,500. In fact, all qualified retirement accounts across the board, all the contribution limits went up drastically, especially with 401ks. And then the other 2 simple ways of doing it is called an IRA to IRA transfer. So many of you, as I mentioned, have accounts with Fidelity, Vanguard, Schwab, or one of the other 10,000 brokerage firms that are out there. So we could issue out an IRA to IRA transfer. And lastly, and most importantly, an old employer plan. Old employer plan. So if you're currently employed, unfortunately, you cannot touch it, and you're going to have to ride the wave. So there's not much that we could do at that point. But that's what we're here to do, Jacob, myself, is to educate you on different strategies, because this is a strategy. And we would simply establish the IRA account. IRA Club would work on moving the rollover, the IRA to IRA transfer, over to the IRA Club. And the last thing is invest. That is the one rule here at the IRA Club, is no IRA Club employee could ever choose the investment for the investor. I mentioned the word earlier, control. We're trying to take the control away from them and giving it back to you, the investor.
Which is, so if we have $100,000 and you had a property, they could literally use that $100,000 as a down payment from that property, correct?
Correct. So we don't want to talk down, because you use the analogy of a private placement. Now, let's just say it was filed as a 506B or a 506C. IRA Club would actually get with whoever you want us to work with. So remember, IRA Club is the bookkeeper of your IRA or 401k. All right. It's designed to have a true system of checks and balances as the administrator. So what that ultimately means is, we're not a call center. You call, you're going to get the receptionist. I want to speak to my IRA Club specialist because I don't know what to do next. So in the case of the 506B, because we're investing in a private placement that just so happens to deal with real estate, and you decide that you want to roll over $100,000 over to the IRA Club from let's say Fidelity, Vanguard, and Schwab over to the IRA Club, we would work with your sponsor or the investment opportunity to pre-fill all the investment docs on behalf of your IRA, because it's not you buying it, it's your IRA that's investing. And remember, your IRA is a trust, so it's a separate entity from who you are, which gives you the reasons why of tax deferred or tax free. So once the account is open, once the account is funded, we will work with, for example, if Jacob has an investment opportunity, a private placement, our investments team will cross all the T's, dot all the I's, make sure you don't cause a prohibited transaction. That's the most important thing, because we don't want to blow up your entire IRA or solo 401k. And then just simply put the dividends or the rental or anything that you're investing in would just come back not to you, but your IRA account, tax-free or tax-deferred, depending on which account you have opened. It's as simple as that. Let us do the work for you.
So in other words, the investor makes the decision, you guys do the fulfillment. You make sure the money gets where it needs to go, but you are in control. The investor is in control.
Correct. 100%.
I like control. I've got control issues. My mother said so since I was a baby. It's been that thing. Yeah.
Not you, Jacob. Not you.
Still single. As of the taping of the show. That might change. Anyway. I let it go. Something else I wanted to mention, because you did say this, one thing I love about self-directed IRAs is you can actually invest into tangible things like you were talking about with having precious metals. That's always very interesting. And I want to talk about that in a different conversation.
Mhm.
I started investing in gold in 2000, gold and silver in 2019. And I do not regret that decision whatsoever today. It's
Not right
wonderful.
now. Not right now.
That was a smart move. I'm glad I did that early.
Two thumbs up.
Now there's something else. So there's something that you want. I want to know. I want to make sure I say this for everyone listening, and then we'll wrap this up a little bit. But when you are when you're investing, there are two things you want to know. First of all, the crash that happened before is going to be different than the correction that's going on now. Why? New legislations are in place, different checks and balances. Our economy, our world is different than it was 15 years ago, right? So we want to know that. So don't look for the same things. However, you do need to look for new things. One thing that's going to be the same is tangible assets. Your precious metals, there's a limited supply, right? Your real estate, limited supply. Your tangible real estate, your tangible asset classes are going to be things you can control and understand, and they have a very strong history, right? So understand that. The second thing you want to look at is tech is changing. And because technology is always changing, you have to pay attention to it, because the solutions to the problems that we have today are going to be found more often than not in new technology, addressing older problems. And that happens so quickly. Now, one thing I'm really excited about with the technology changing is with things like NFTs now. I have a personal belief that NFTs will help us end homelessness. I actually have a theory behind that, which I'll talk to you about a different time. But how NFTs are here, they weren't there in 2008, right? Crypto wasn't a thing yet. So we have to understand that technology is shifting. Because of that, you guys are also shifting as well. So IRA Club, you guys are now able to trade on your platform. Is that correct?
So I'm actually happy you brought that up, Jacob. So technology, and just how Jacob referenced, everything is changing around us, right? We have to change with the times as a self-directed company ourselves. So how so? We're completely rebranding, completely redesigning our website to have it more tailored. And I hate to say this, as much as I hate to say this, it's really accredited investors, Jacob, that utilize self-directing better than non-accredited investors. And I'm being upfront and honest with you. So the new website is tailored for both the accredited and non-accredited investor. So with that being said, this new website is going to be much more, I would like to say, powerful, because we will have an ACATS. And for those of you that are not familiar with what an ACATS is, this allows IRA Club to have the movement of not only money, as we refer to it as an ACH or wire transfer, but the movement of securities. So we'll be able to take on, let's say, hypothetical Amazon stock or Tesla stock or bonds, again, over to the IRA Club, which is a really big deal because that officially gives us a trading platform. And because we have a trading platform, we wanted to take it a step further by offering something called AI. It seems to be as you know this, Jacob, the wave of the future, right? Everyone's getting involved in AI. We're going to be the first self-directed IRA company to offer AI, where it's going to buy, sell, and hold stocks on behalf of your IRAs and 401ks. This is huge because I don't want you to think of it like a robo-advisor, all right, where it's a single algorithm. This is over 2,500 algorithms, again, that are built into a computer-based model that take human emotion out of it. And they're just simply, again, as the market's going throughout the day, buying, holding, selling, buying, holding. In fact, we're so proud of it. It's been around, and I should actually give more kudos to the tech company that put it together 9 years ago called iFlip. So they're exclusively working with IRA Club, and we're referring to it as smart folios. So an example is the S&P 500, Jacob, which is, you know this and I know this, is the standard benchmark that most of us, like to make sure that, you've heard this a million times. Leave your money in the S&P 500. You're going to make the 9-10% return, which is absolutely true. Well, the S&P 500 last year lost 19.53%. Our smart folio, on the other hand, which is our AI technology, lost 3.73%, which is a significant amount, because you're talking about double-digit returns. You know this, Jacob, and I know this. The market, when it is volatile, you're giving up your most important asset, right? Time. Because if you lost, you talked about the 2008 crash, people lost half of their their 401ks, their IRAs during that crash. It didn't take weeks, didn't take months. It took, in fact, 4.6 years to recuperate what you lost. So if you thought that you were going to retire at 60, you add on 4.6 years to get back to that break-even point. So time is the most important asset. And if the AI protects you against market volatility, because you've heard this, Jacob, I've heard this, you got to catch the 10 best days of the market in order for you to get your 9-10% returns. Well, what the AI does is it protects you against the 10 worst days. That's the focus of what we're trying to bring here at the IRA Club.
That was well said right there. That's very interesting. You see, the more I invest, the more I learn that I've got to learn. Like your skills, like I was a professional dancer before this, right? So my skills got better every year I was dancing because I was more familiar with my craft. The same thing is going to happen with your investing. You're going to become more crafty, more skilled, see more patterns that you just don't see when you start because you didn't have the eyesight, the experience to actually look forward and see patterns. So I'm glad that the AI is there to help you, kind of like as a stop loss measure, so you don't lose as much as you could have, but you're still going to develop the skills to recognize that, as well as improve your skills to make more returns in the upside, which is great. Now, I could talk to you forever, Ramez. I love talking with you. You always have so much value to bring to us. Tell us, I'll say this way then. If you're interested in learning more about IRA Club and speaking with Ramez directly, you can go ahead and click on the link below. My affiliate link is down here on the bottom. You can go ahead and open up an IRA account with IRA Club for it's like $200, right?
It's actually 175 year after year, the annual fee, and then per asset, per investment is 135. Unless it is a hard tangible asset like a house on 123 Green Street, then it is an additional 175. But as I mentioned to you, it's a flat fee model. We don't care if you have 10,000, 100,000, or 10 million. That 175 does not change. That's the beauty of it. So we're trying to keep more of your retirement funds in your wallet, in your pocket, because you need these dollars. They're very precious to you. It's your nest egg. So when you do retire, you have enough of it to pass the wealth around.
My ex was a financial planner, and he would make money based on assets under management, which was commission based.
Yep.
So yeah, it's quite cool that you guys are able to do this. I think it's such a valuable product, especially for people trying to change their status, change their class, and take care of themselves and their loved ones when they retire. So thank you for everything you guys are doing there at IRA Club. I love working with you guys. Tell Kasha I said hi, and Dennis.
I will, Jacob. I will. Always a pleasure.
Conversations.
Absolutely.
So guys, thank you so much for tuning in. If you've enjoyed this, please go ahead, like and subscribe, and share this knowledge with people, because you know what? Your loved ones deserve to know this stuff too. They're trying to take care of themselves. And if you want to take care of your family and your friends, let them know that these products are here. I, of course, am here to be a resource to you. My name is Jacob Reed Jennings. I'm a licensed real estate broker in the state of Florida. I'm also a nonprofit expert, and I am here to serve you. So if you have any questions, reach out, and I also get you in touch with Ramez. So from my home to yours, this is Jacob Jennings saying you are flipping fabulous.
Take care, everybody.